Some good economic news hitting the tape this morning, and that's certainly helping what is going on with at least the S&P 500. The New York Fed's Empire State Manufacturing Index unexpectedly surged this month. It jumped 11.2 points, much higher than the expected contraction of 0.5%. This is a really welcome sign, considering high oil prices recently have added to input costs for a lot of the manufacturers. So the S&P at a record, reflating American investments in your 401ks, but inflationary pressures are still hitting them at the gas pump. Anything plastic that they buy, anything that needs fertilizer, with the Iran war and the spending to fight it still in play, what's in store for the economy and your portfolio? Joining me now in a Fox Business exclusive, Gene Sperling, former National Economic Council director. And we should note that the last time the U.S. had a budget surplus was during Gene's tenure during the Bill Clinton era. That would be fiscal year all the way back in 2001. Wow. First, let's tackle, Gene, the markets at the moment. The markets, they always say, are about 6 months ahead of the U.S. economy. Does that indicate to you that, as we are seeing, we should really actually switch out the bug to the S&P, because 7,000, that perhaps the economy is not far behind in really muscling up?
Look, I think, you know, any of us who care about the American economy have to hope that these indexes, you know, have something to say about how the economy is going to do for real people. You know, obviously, as you cover so well on your show, I mean, the volatility based on what the latest news from Iran is so dramatic. It's just head spinning. I mean, if you look at the real economy right now, though, you know, I don't see quite the degree of optimism. You've had people, you know, if you look in 2025, was not a terrible economic year, but inflation was higher than projected. Growth was lower than projected. GDP got a help from all the AI data investment, but across the sectors was not particularly strong. And I really do think the tariffs, you know, not only hurt inflation, they hurt business uncertainty, and I really think they crushed a lot of small businesses that are, you know, that don't have the flexibility that some of the big companies do. Well, so, you know, when you see this, of course, it's good for anybody who's got, you know, investments or their 401k. But I have to say, it's just been head spinning volatility. And of course, one always hopes for the best. But, you know, I personally, you know, I'm not totally sure what is the foundation for the degree of optimism, even in the middle of this war. And as you've discussed well today and with Hank Paulson, how much potential there is for inflationary pressures to remain through the year.
Well, Gene, when we're looking at inflation and we're looking at spending, and we're seeing that, yes, at the moment we are running a deficit of about $1.17 trillion for the U.S. government, and the debt has now soared, punched above $39 trillion. Today on the Hill, we're in Washington, D.C. right now, we had Russ Vought, the OMB director, testifying before the House Budget Committee about President Trump's fiscal year 2027 $2.2 trillion funding request. That has a lot to do with the military budget, certainly. Defense is costing a lot. And at the start of this war, President Trump and the Pentagon were hoping to get an additional $200 billion to fight the Iran situation here. You know, at what point, and reaching back to your term when we had a budget surplus, again, you had the peace dividend, let's be fair, but what do we need to do to start chipping away at that debt and the deficit?
Well, I think you know, we need to make wise choices. Obviously, I disagree and have disagreed with the choices that this administration has made. You know, in terms of deficit increasing, tax cuts for more well-off Americans. You know, sometimes not an apparent, you know, caution or care with their own budget. I mean, you saw, beyond what you just said, the administration asked for a $350 billion reconciliation boom to defense. So I think if you look over the last, you know, 10 years, even though you've had two different Republican administrations, the debt and deficit have continued to decline. In fairness, both the Trump and Biden administration had to deal with a historic pandemic, and you had over $3 trillion added or more under Trump, and then you had another couple of trillion added, and one couldn't take away.
Let me just be clear to our viewers.
Yeah.
The pandemic was largely cleared and over, and the Biden administration gave a lot of stimulus and a lot of spending as well. So we here at the Claman Countdown try and be really clear and fair about that. And I'm glad you brought up that the spending has been on both sides here. That said, the interest rate picture. President Trump would like to see interest rates come down because servicing the debt would become less expensive. Just to service our $39 trillion in debt, it's going to blow people away, cost more than the entire Pentagon budget of 2026.
Liz, I don't mean to get into, and we don't have to get into kind of a kind of political debate, et cetera. But, I don't agree with the assessment that everything was honky-dory. The inflation for the entire OECD, for all of the countries, was 8.6% in 2022. And you had when President Biden came in, still a very, very questionable economy. And then you had not a war of choice, but you had a war induced by Vladimir Putin's investment of Ukraine. So I guess I would not agree with you on the idea that there was no need for any further response. And you should also remember that the initiatives that President Biden did actually did pay for themselves. And that's not something that we've seen from the Trump administration. But I think what's been most unfortunate is that when President Trump did take office, inflation was on the way down. It was on a spiral down, and it was still going down even the first few months. And there's just no question that the tariffs turned it in a different direction. And so you've had two events now, both the tariffs and the war, that have kind of stagflationary impulses. They're not good for growth, and they're raising prices at the same time. So I do think that one has to see, even if you support, as I do, having a strong manufacturing sector or strong manufacturing policy in the United States, and even if you think there was reason to threaten action with Iran, the way that both of these have been carried out have, I think, led to self-inflicted wounds that have affected interest rates, inflation, and the degree of confidence in the United States' long-term stability.
Gasoline prices, Gene, up 79% year to date since the Iran war, up 34%. But again, you bring it into the five-year picture, and we're not a political show, only if it matters to people's pocketbooks, and this does. The past 5 years, which would encompass President Biden, you've got RBOB gasoline, this is wholesale, up 51%. So that brings us to what Scott Bessent, the Treasury Secretary, said today in Washington, D.C. I want you to listen to his point that he made about inflation and gasoline prices.
The Straits of Hormuz have not been completely reopened, so we will see. And I'm optimistic that during the summer we will see gas with a 3 in front of it sooner rather than later. I've been meeting with a lot of my Middle Eastern counterparts, the finance ministers, and they all say that once the straits are open, they can start pumping again within 1 week.
If you were right now in the chair at the NEC, tell me the number one thing you would advise a president to do.
I think the number one thing I would have said is focus on short duration, because I really think if I'm looking at the things that matter most, I'm looking at what is the duration of this conflict, number one. Two, how much long-term damage has done. Secretary of Treasury is being very optimistic and I think inaccurate in how quickly they will be able to turn on production in the Gulf. And then the third thing is obviously the big issue, which is how do we manage the Straits of Hormuz? If I was thing I would be most critical of this administration for, even going beyond the war of choice issue, is that the Straits of Hormuz that Iran having leverage over that, being able to collect tolls, being able to threaten the global economy, that was not an existing problem. That was a problem that was created by the execution of this war, by the lack of working together with our allies. And so right now, what you're doing is you're talking about correcting a problem that was created starting on February 28th. And I think this will be the number one issue. So, of course, we're hearing quite a lot about the nuclear enrichment issue, but I think for people watching your show, the thing that's going to matter most is duration and what is the resolution on the Straits of Hormuz, and how much does that higher prices, as you've talked about, start feeding into not just the dollar more at the gas pump, but higher plastic, food prices, all the things that you've mentioned before on this show.
Gene, great to have you on. I'm sure a lot of people would disagree that it started in February, because for years, Iran has been the worst when it comes to funding terrorist organizations, and that has been a menace to an entire region and threats to the United States. But that said, we got to run. I'm guessing you'd agree at least with that.